Let's get right into it for Thursday, October 9th, 2025. There is a massive geopolitical story breaking that's sending shockwaves across pretty much every asset class. But the real story for investors is this powerful countercurrent coming from the U.S. Federal Reserve. It's creating a fascinating tug of war that is really going to define the rest of this week. So here's our game plan for today. We're going to start with the huge breakthrough peace agreement in Gaza. Then we'll track the immediate market reaction. After that, we'll pivot to the U.S. markets to see how that relentless AI story is colliding with this news, before diving deep into the Fed's critical dilemma. And then we'll get ourselves ready for the day ahead. All right, first up, the headline that is absolutely dominating every terminal this morning. After 2 long years of conflict, a major diplomatic breakthrough has been achieved in the Gaza peace negotiations, and it's bringing a huge wave of relief across the globe. So what's in this deal? Well, this U.S. brokered plan establishes a crucial Phase 1 agreement. At its core, Hamas is said to release all remaining hostages. Now that's believed to be about 20 people still alive, plus the remains of those who died in captivity. In return, Israel is going to release about 2,000 Palestinian prisoners and pull its military forces back to a predetermined line. It's a truly landmark step toward ending what has been a devastating war. The U.S. president quickly framed the agreement on social media as a first step towards a strong and lasting peace. And what's really encouraging is that both the Israeli prime minister and Hamas have confirmed the deal, signaling some cautious optimism. Now look, this is just the first phase of a much bigger 20-point plan, and there are still huge challenges ahead, but for right now, the markets are breathing a collective sigh of relief. So how exactly are financial markets translating this news into dollars and cents? Well, the reaction has been swift and, frankly, pretty textbook. We're seeing traders immediately start to unwind that geopolitical risk premium that's been baked into asset prices for months now. And what we're seeing is just a classic risk-on reaction playing out in real time. First off, Brent crude oil is pulling back sharply, dropping below $66 a barrel. Why? Because fears of a wider conflict messing with Middle East supply are starting to fade. At the same time, those traditional safe haven assets are retreating. Gold, while it's still holding that incredible $4,000 level, is easing back from its recent highs. And to top it all off, the VIX, Wall Street's fear gauge, is settling below 16.5, which tells us there's a real decrease in market-wide anxiety. Okay, let's pivot now to U.S. stocks. With such positive geopolitical news, we might expect a huge rally at the open, right? But instead, futures are pointing to a flat, almost hesitant start. So what gives? What's holding the market back from a full-blown party? Well, the answer really lies in yesterday's session, where markets had already priced in a ton of optimism, just from a different source. We saw this massive rebound on Wednesday, especially in tech. The Nasdaq jumped 1.2%, and the Philadelphia Semiconductor Index, the SOX, absolutely ripped higher by 3.4%. And this wasn't about geopolitics. It was driven almost entirely by that relentless, all-consuming narrative around artificial intelligence. I mean, if we need a single number to capture the sheer power of this AI frenzy, this is it. Chipmaker AMD rocketed up over 11% in one day. It's just a stunning move that shows that while peace is a welcome tailwind, the gravitational pull of the AI investment theme is still the #1 force that investors are wrestling with. This focus on what central banks are going to do is also creating some huge waves in the currency markets. While the dollar is flexing its muscles based on Fed expectations, other major currencies are feeling the heat. The Japanese yen is under some intense strain, with the dollar soaring past 153 yen to an 8-month high, as the Bank of Japan signals it's in no rush to tighten things up. Meanwhile, the euro is kind of struggling around the 1.16 mark, getting weighed down by some weak German economic data. And that right there brings us to the biggest question mark hanging over everything, the real headwind to the market's good mood. What on earth is the U.S. Federal Reserve going to do next? This deep uncertainty around American monetary policy, that's what's keeping a lid on this rally. So on one side of this internal debate, we have the doves. New York Fed President John Williams, a major voice at the central bank, has all but endorsed more rate cuts this year. His focus is shifting to the labor market. He's worried about a potential slowdown, and he's signaling a pretty clear bias towards easing policy to protect jobs. But then, on the other side, we have the hawks. The minutes from the Fed's last meeting, which came out just yesterday, they paint a very different picture. They show a lot of officials are still deeply concerned about sticky inflation, with a majority believing the risks are still tilted to the upside. So the bottom line is this. We have a Fed that is openly divided. Is the priority killing inflation for good, or is it protecting the job market? That uncertainty is exactly what's keeping investors on edge. So with these two powerful opposing forces, geopolitical relief and Fed uncertainty, what should we be watching for as the trading day gets going? Well, the economic calendar is absolutely packed with potential market-moving events. Looking at the schedule from investing.com, it is crystal clear that today is all about the Fed. We get the weekly jobless claims data at 8:30 a.m. Eastern, but the real main event is the parade of Fed speakers. We're going to hear from members Bowman, Barr, and Daly all through the day. But let's be real, all eyes and all trading algorithms will be locked on Fed Chair Jerome Powell, who speaks right at 8:30 a.m. Eastern. His words are going to be scoured for any clue that could finally tip the scales in this great debate. And that leaves us with the ultimate question for today and for the rest of the week. We have a clear positive catalyst, a geopolitical tailwind that's pushing markets higher, but pushing back with just as much force is the massive headwind of uncertainty around the world's most important central bank. Which of these powerful forces is going to win out and set the tone? I guess we're all about to find out. Thanks for watching. Don't forget to like and subscribe.